Good morning. This is Sheldon here from the Currency Advisory Desk. Asian markets were open lower today on global growth concerns. Also, we see that in the US, the Fed will release the minutes of last month's policy meeting, and wherein Ben Bernanke had indicated that there could be another round of probably further quantitative easing happening. So we'll get a confirmation on that. Now we have also the US trade balance which is due today. Expectations are there for a reduction in trade deficit because we've seen that the crude oil prices also have fallen, so hence they've been able to get access to cheaper crude, and also there's a reduced demand as far as spending is concerned in US. Now this has helped trim the import bill, and this is positive for the dollar. We suggest we could go ahead with a buy dollar against the rupee call today, because right now the dollar is trading at around 55.50 levels. It has opened on the positive note, and we are expecting it to see an upward direction to move up to probably 56 to 56.20. Now moving to the euro, yesterday the euro touched 1.2235 against the dollar. Now this is the lowest for the euro since July 2010. Now, Germany's Federal Constitutional Court also passed out, a very major decision yesterday. We had seen the meeting which happened last week, wherein there was consensus as such to say that they will go ahead with further ESM mechanism which would stabilize the euro countries. But yesterday the court did something very contrarian. They went ahead and they delayed the approval of the ESM, and right now it has been kept on hold. Now, this news is bad for the euro, and the euro, as we expected, it fell down to its lowest of 1.2235 since July 2010. We had some very good news from UK, good industrial data from UK actually. The UK industrial production, it rose by 1% in the month of May, and the exports also for UK bounced to 7.8% for the month of May, that is. Now this helped reduce the trade deficit by $1.3 billion. Now, right now, we can see that the pound, even though this positive data has flown in, the pound is not reacting much against the dollar. It's not moving up. This is primarily because of the euro. We've seen that for the past couple of trading sessions, the pound and euro are moving in tandem. That is, if the euro is rising, the pound is also rising. Because fundamentally also, if we look at it, the pound, the nearby trading countries for the pound, or the way we look at the trade deficit or trade surplus, is how much of its exports or imports are from the nearby trading blocks. And definitely if the euro's health is not proper, the pound will definitely not beat expectations, or it will not show any contrary move to the euro. So this is what is being followed for the past couple of trading sessions. We are a bit bearish in the pound, and we recommend a short sell at this particular level. However, owing to the dollar rupee movement that is there, or the dollar rupee support due to which we get the currency rates, we can see that the pound might not depreciate as much against the rupee as it is depreciating against the dollar. So probably we could go for you could say a spread call here, wherein we could probably buy the dollar and short the pound to get the movement what is there in international markets to reflect it onto our desks also. Moving to Japan, the yen remains stronger against the dollar after a 3-day gain on the European Union debt crisis. Now we see that there will be the Bank of Japan meeting on monetary policy tomorrow, and not much is expected from the Bank of Japan for tomorrow, because already they are showing some signs of improvement, and Bank of Japan will not want to intervene and cause further problems to happen for their economy. So as of now, yen is behaving as a refugee currency, wherein we are seeing that the yen is strengthening, and it has strengthened in fact against the rupee also. It has gone up to around 70.02. Now we have a buy towards the yen, because we feel that the yen will move up to around 70.35 to 70.40 at least in the near term. Now looking at it, we see that even though the yen is strengthening, the preference for currencies is first dollar. Everybody wants to hold dollars. Every major corporate wants to hold dollars in their portfolio, or to hedge their whatever import export risks that are there. So dollar is the major safe haven currency, If there is any adverse news from the Fed meeting today, the dollar will definitely give up its gains, or if there is further indication that quantitative easing will happen, then we'll definitely see the dollar giving up and equities will run. So basis that, we feel a strategy in yen is much more suited, wherein we can go ahead and buy yen for today's intraday movement, that is. Well, that's it for today. Thank you.